Now, moving forward, I would like to introduce the first panel, BFSI sector and Resurgent Bharat. This panel will be moderated by Shanta Saikia, Editor-in-Chief at Gilly, and the panelists joining her are Ankur Khurana, Head of Brand and Marketing India Lens, Prabhakar Tiwari, Chief Marketing Officer Angel One, and Tushar Verma, Business Head NeoX. Over to you, Shanta ma'am.
Good afternoon, everyone, and very welcome to our 2022 edition of CMO Charcha. The topic that we have for discussion today is the BFI sector and Resurgent Bharat. The BFI sector is on an upward growth track, with India Ratings and Research expecting the credit growth to reach 10% in 2022-23, hitting double digits for the first time in 8 years. PricewaterhouseCoopers in its report Banking in 2050 pegs India to be among the top 3 domestic banking sectors. This surge in the BFSI sector is largely attributed to the rapid adoption of digital payments and use of modern technologies such as artificial intelligence, machine learning, and blockchain. Along with this, another major factor that has been contributing to this growth is a resurgent Bharat, looking beyond the metros and tier 1 cities. This is a market that has been coming into prominence in the pandemic times, when we saw a lot of population migrating to the smaller towns during the lockdown period and bringing the market aspirations to the smaller towns. So today's session will be focusing more on how the BFSI sector can sharpen the focus in a resurgent Bharat, because India, as they say, comprises of many smaller markets, and how to harness the great potential in these markets. We have a very interesting mix of panelists over here. Mr. Tushar Verma is here, Ankit Khurana, and Prabhakar Tiwari over here. So, gentlemen, we would like to first have your observations and insights as to the growth of the BFI sector in tier 2, tier 3 markets, as well as the rural markets. So, Tushar, why don't you start with your insights?
Sure. So thank you, Nehal. Thank you for getting us all together to kind of talk about the emergence of BFSI and fintech, and especially focusing on what's happening in the leave apart the top 7, 8 cities. What's happening in the other tier 2, tier 3 cities? So at Neo, we have two product propositions which we which we've got today. One wherein we focus on the Bharat side of business, wherein we do serve to these lower end segment, opening up their salary accounts, and we take pride in doing that, and we have been doing that since demonetization. And we see that this segment, while one may assume that this segment, how will they use a mobile app, and how would they be able to do financial banking transactions on the mobile app? They may not be that literate to read through what's happening, what's there on the mobile app, and do their day-to-day transaction. But to our surprise, and to a lot of us over here on the call will also be will agree to the point that I make here, that this segment is a huge consumer for any digital content. So they are pretty used to putting their mobile application to right use, to do whatever they want to do. They may not be literate, but they are good enough to do a banking transaction on their mobile app. Given that the mobile app is just not talking in English, it is multilingual, and so on and so forth. The other business that we do is on the NeoX salary account, wherein we focus majorly on metros and tier 2 cities at best. And so we find that the BFSI as a segment is huge. While if you can just look at the data, there are around 99,000 odd banks. When I say all banks, cooperative, urban cooperative, rural cooperative, all the MNCs, and private and PSU banks are very limited and few, close to around 130. but there are huge banking setups in, rural cooperative setups. Almost 96,000 is what I was reading some articles a few days back. So there is a, huge potential lying up in our tier 2, tier 3 cities and, rural India. And that is, yet to be unlocked. That value there is yet to be unlocked. Around 45 crore of Jan Dhan accounts opening up in such a short time with around $21 billion of balances in these accounts goes to show that the potential is there. And that's where all these fintechs and, banks are today trying to, capitalize on. Because what's happening in the urban markets or the metros is that, for the same set of customers, there are 5 or 6 banks who are eyeing in for their portfolio to lend it to them and all. But there's a huge untapped market, still credit hungry, which needs to be yet to be served by the banks and the fintechs. So that's where I would want to kind of pause for now and hear out what others have to say here.
Thanks, Tushar. Prabhakar, what are your views on the BFSI sector and what it can do here?
Yeah, thanks Shanta, and thanks Padgali for inviting me in this panel discussion. And lovely to have all the panelists and you today for getting more insights on the topic that we're discussing. Angel One is a fintech company, majorly in offering brokerage platform. And we are the largest brokerage house on multiple parameters in our industry. We also offer direct mutual fund loans and insurance on our product platform. We acquire close to 0.5 million customers on a monthly basis. And currently we have around 9.2 million people on our platform. So we have a very large, kind of a customer base. And if you look at fintech, I think brokerage is the most complex use case because equity market penetration is very low in the country of our size, close to around 4%. And if you look at that number from China market perspective, which is around say 14 to 16%, and then American market, which is around 34%, I mean, we have just started in the journey. The interesting part in the context of rural India or suburban India, almost 90% of our customers are coming from tier 2, tier 3 and tier 4 cities of India. And these trends have continued for last 2 years. And there's no stopping there. Almost 70% of them are first time, in the equity market. So these are the kind of numbers, and almost 90% of them are below the age of 30 years. The median age will be around 28 to 29 years on our platform. So the Resurgent India, I mean, is amply applicable to the business like ours. And the reasons are not, so esoteric to understand. I mean, the first level answer to this is that mostly if you look at brokerage business or distribution business, mostly it was a bank branch-based model or not NBFC branch-based model. But this model doesn't have a scalability beyond a point. Thanks to digital, now we are entering tier 2, tier 3, tier 4 cities where branch openings are not financially viable. Or maybe the catchment area which a branch can manage would be too small. So that's the first reason. I mean, digital gives us, an app-based business gives us a larger reach in tier 2, tier 3, tier 4. And let's not forget, I mean, that's where like almost 70-75% of Indian population reside. Okay. So on a sheer number basis, I mean, this this portion will be higher. The second is the ease in opening account. Thanks to Digital India initiative, now eKYC and Aadhaar e-sign, data locker, all these are become mainstream. So in the same KYC DIY journey, a customer can complete the entire process, without any physicality to the entire process. That's amazing. So that's also helping us, because now we can actually do the entire process much faster operationally, and the cost of servicing another customer is like close to zero, the marginal cost of serving another customer. The third bit is in terms of like what's happening in our business. Like look at the investment avenues which are available to people in tier 2, tier 3, tier 4. I mean, real estate has been struggling for almost a decade now. If you look at gold, I mean, it's very cyclical, and also it's struggling. Look at FDs and other such investment in fixed interest instrument or debt instrument. The risk-free premium is much higher in equity as an asset class, and that's why people are showing a lot of interest in going ahead and putting their money there. And the fourth thing is like we have a new generation of Gen Z, and of course millennials, which will include me also, but in the in extreme end of millennials, to be honest. So unlike our parents, there are more disposable income, so we can plan our investment accordingly, and we are not bound only with owning a home and hence paying EMI to the major productive part of our careers. That's something we are not bonded labor in that sense, that we are paying for the bank and the builders kind of well-being. And also this generation is not afraid of volatility, which is kind of hallmark of equity market investment. And also they have an open mind in terms of the kind of asset class they want to pursue. So all these things combined, we are seeing that Resurgent India is opening demat accounts in hordes for last 2 years. This has been continued, and we have just started. It's a land grab opportunity, to be honest. And the rural India is really rejoicing the kind of UI UX simple experiences, thanks to geofication, thanks to low cost smartphone. They can actually put their money, hard-earned money, in the equity market. So I will stop here. We'll discuss more as we move along with the panel discussion.
Right. Thanks, Prabhakar. That's actually very interesting, the insight that you've given. We didn't know that 90% of the population in these smaller markets are, investing in broker, in the equity markets and all that.
Our monthly customers are coming from tier 2, tier 3, tier 4.
That's quite a huge number, actually. So we'll touch upon it later, how this transition has happened. In the meantime, Ankit, why don't you give us your insights as to the BFSI sector and Resurgent Bharat?
So thank you, Shanta, and thank you, Tushar and Prabhakar, for sharing your insights, and also Adkali for having me here. So I head marketing for India Lens, which is a consumer credit marketplace. We lend personal loans and we offer credit cards from 50 plus lenders. And we've been in the market for about 7 years, catering to close to about 12 million users. What we've seen, interestingly, is that, of course, for lending, banking needs to be there. Being a completely digital process, if you're unable to get access to any kind of banking data, we can't really lend money to anyone. Moreover, it's not our money. So policies change from lenders to lenders. But what we're seeing is that lenders are becoming more and more, their focus is shifting more and more towards tier 2, tier 3, tier 4. However, these are still urbanized centers, right? We're not talking about rural centers, per se. But an interesting trend, what we see is that as marketeers, we've been forced to change the way we communicate and really put something together which is different for that audience. You can't just recycle content and marketing campaigns that were probably working for you in the urban or larger metro tier 1 cities for tier 2 centers and tier 3 centers and so on and so forth. It's interesting, and at the same time, it's also an opportunity because it gives you an opportunity to actually understand the customer there, right? Their spending habits and their borrowing habits are different. But at the same time, it's a very aspirational lot, right? So like Prabhakar mentioned, the Gen Z and the late millennials, not the early ones. I would probably be one of the early millennials, but we're talking about people from the age group of anywhere 22 to about 32, 33, 34. What we essentially are seeing is as content consumption increases in centers, it is contributing largely to aspirations. It's sort of fast tracking people's exposure to what can be done with their lives, and
and it also creates this sense of urgency to actually achieve it sooner, whether it is when it comes to investing or it comes to borrowing and then affording anything. I mean, I'm not just talking about discretionary spends. There are more and more people borrowing for education. There are more and more people borrowing for transportation, for your auto loans. All kinds of borrowing that's happening. But again, like I said, for us, what matters is as our lenders start sort of opening up their markets to go deeper into Bharat, we keep modifying our way of actually communicating and speaking with these customers to make it as simple as possible for them to understand what credit is, how to look at, how to sort of perceive it responsibly, and then utilize it or repay it responsibly. Because unfortunately, credit knowledge comes before we can disburse anything. You need to understand that when you're borrowing money, you need to repay it, and that kind of education has to be imparted in a manner which is easily digestible for the audience. But over the last 2 years, we've seen tremendous growth in tier 2, tier 3. Like I said, rural is still something which is not something that is coming within our purview as a business or a business model, but there is much greater contribution coming in from tier 3, tier 4 cities, and that's all thanks to a large number of banks that are coming up, or NBFCs that are coming up, and creating products for this kind of audience.
Right. Thanks, Ankit. And it's great that you touched upon the marketing and the communications side of it also, which is very important, to connect to this Resurgent Bharat, because this Bharat speaks many languages. There are a lot of cultural nuances, and aspiration levels are definitely much, much different from the larger markets. So Tushar, could you take us through as to how marketers need to approach this particular TG over here that resides in Bharat, and what are the do's and don'ts that they need to keep in mind while addressing their aspirations and expectations?
Well, Prabhakar and Ankit can take a better shot at that because I'm more of a business guy and less of a marketer. But what I understand is that as I said initially, the content that they the digital content that these guys consume in these tier 2, tier 3 and rural market has like gone up like crazy, and I was also I've noted this, that I think T Series is one of the channel on YouTube which has got one of the biggest subscribers
Right.
in the country, and obviously a lot of us for this market would want to kind of have arrangements with them, and digital is obviously much a faster way and a effective way to reach out. But there are a lot of small brand activation and micro activities which could be done in these markets to create awareness and all. So I in my opinion, I would say 80-20, 80 digital and 20 on ground micro activity is something which I find should be working better for this segment. But yeah, Ankit and Prabhakar can add to this.
Right. So moving over to you, Prabhakar, like you were discussing, 90% of the population investing in equity markets and all. So that transition didn't happen in a day. So how were they engaged through communication, through marketing strategies to bring them on board for this kind of a transition?
See, the beauty of digital world is that the customer journeys are fairly predictable, and there are digital, kind of breadcrumbs in a manner of speaking, which are left behind. Okay, particularly in the context of BFSI and fintech, if you look at it, the emergence of YouTube kind of platform, which were around, but they saw a massive shift. Influencers coming in, a lot of esoteric financial topics are being discussed. A lot of content is available in vernacular language, has played a role. Then look at TikTok, MX Takatak, kind of platform, which have brought in very interesting content, which are entertainment plus education, what you can call it edutainment. Okay, so that has also happened. And also, if you look at other things like Twitter, I mean, you're hearing from the horse's mouth, in the sense that, many celebrities whom an average customer has no way of reaching out or listening from the horse's mouth, now you see their instant reaction to what's happening in the world around you. Okay. And of course, apart from that, there are other Snapchat and multiple TikTok, Telegram channels, WhatsApp community. There's no dearth of option. The important bit here is that these channels provide you a larger reach. Okay, larger reach to advertise, larger reach to educate customer, and put them on a slow burn for conversion. Okay, in the digital journey. And then more importantly, you get influencers. In a way, influencers are salespeople for your category and sometimes for your company. Okay. Now, and also what are they doing? They're opening up the funnel, digital funnel. I mean, top of end of the funnel, the category saliency is going up, the category knowledge is going up, and some bit of category preference is getting made. So those kind of things are happening. If I talk specific to Angel One, I mean, I've been around for last 3 years. Till 2021, I was heading marketing only. Now I had both sales and marketing. I will tell you, the entire sales marketing funnel has kind of shortened in a way, right? Customers, as soon as they get exposed to any of your advertisement or digital communication, the large percentage of them will kind of fill up the lead form in first 24 hours only, and large percentage of them will convert in first 2 to 4 days of once entering the lead form. And today many of these conversions are happening through DIY STP channel, to the extent that no contact center employee. I mean, we are like totally 100%. I mean, we don't have on-field sales people, right? Everything is happening digitally for us, right? So those kind of sense of intent, a sense of urgency has come in, and I would assume this has happened across BFSI, across fintech, though the intensity and the momentum would vary, but this is what is available. Then fundamentally what you do as a marketer and sales guy is you just keep on looking at your funnel, look at how can you bring in more people on top of the funnel, and how can you take out more people from the lower funnel in terms of conversion. So you can keep on bettering your efficiencies, with reaching out to more platform, working more closely with Google kind of platform or Facebook kind of platform or third-party platform. Then you can kind of leverage programmatic, buying opportunities and all of that. So to cut a long story short, I mean, of course, this has not happened overnight. Of course, we have seen, other states now firing up very, very interestingly. Like we are seeing last 2 quarters, UP is actually coming up again and again. And we never thought that, UP could actually consume a lot of financial services and fintech in such large number. But this change has happened in last 2 or 3 quarters that way, right? And whereas UP has the largest population, imagine like if that percentage keeps going on the largest, kind of populous state in the country, what would it do to kind of overall numbers in that way, right? So to cut a long story short, it's all about understanding your digital journeys better, understanding your end audience, and you need to kind of take care of their sensitivity. What we have a 3V approach, which we have been following for like last 2 years on a religious basis. It's like, looking at more voice interfaces, because that's much easier for people coming from tier 2, tier 3, tier 4. They are not too much into keyboard kind of thing. So voice is a very important interface. Then is vernacular content, that's critical. Some of it we can productionize at large number, but most of it will come through influencers, who are doing content on their own. Then how do we engage them, motivate them to talk about the category, talk of the brand. And third thing is in terms of video, more than writing blogs or like slides, it's a video which play a huge role. And again, the videos, some of it is produced by the company and the brand, and most of it is actually kind of productionized by the influencers, in YouTube, Instagram, and other places. So this is how we have been kind of taking advantage of it. And of course, we are doing it better than our competition in the space, and that's the reason why we have jumped from a number 7 to number 3 or number 2 in last 2 years. So we have been kind of doing it better than others.
Right. Great, Prabhakar. So Ankit, Prabhakar took us through a lot of the channels that are, that the BFI sector has been using to connect with the TG base over here. Um, he spoke about voice. He talked about how videos are being created, influencers. Now, influencer definitely is a major factor contributing to the growth. So could you just take us through how influencers exactly are engaged over here? And would you also like to touch upon podcasting over here, where the role of podcasting in creating awareness and bringing more, including more into the BFSI field?
Right. So I think Prabhakar really hit the nail on the head with the 3V's, voice, vernacular, and video. One key observation that we've had is, unlike video, which used to sort of work for targeting metro tier 1 audience, which was more centered around inspiration from the West and essentially creating those aspirations of be like them. Today, especially this audience that we're talking about, tier 3, 4, tier 2, they're quite proud of where they are in terms of their local identity, and that's where micro influencers play a big role. Whilst you can have, so what we've seen is that bases the local culture, the local vernacular, the local taste of things. It works much better when we have micro influencers sort of talking about the product, educating the product, and like Prabhakar mentioned, it's not about education, it's about edutainment, right? If you start giving lectures on things, people are not interested anymore. Attention spans are no longer in those double-digit seconds. They've come down to about 4, 5, 6 seconds max, right? And you need to catch their attention within the first 4 seconds. So it has to be entertaining. It has to be meaningful. It has to hit the nail on the head, and it has to be relatable, right? So unless you're doing all of that from the point of vernacular, local culture, local problems, known face, you can't catch that attention within the first 3, 4 seconds. The audience is still wondering then what is going on. So you need to have all the right, the recipe has to be absolutely right to be able to catch that attention. Sorry, what was the second question?
This was the use of podcasting, whether podcasting really works in addressing this audience.
So far, I believe podcasting, at least for us, has been, we've seen it work better for larger centers. We've not been able to, or we've rather not really gone deeper into podcasting for smaller cities. Today creating videos is so quick and easy that and it works. So whilst podcasting has great potential when it comes to larger centers where we have it's more from an educational content perspective that works, but video sort of works much better for smaller centers. At least that's our experience. Maybe Prabhakar can touch upon that a little bit more if they've tried with podcasting.
Just want to kind of add on to what Ankit has already shared. Somewhere podcast, 2 years back, podcast was hot thing, because the industry was just learning about it. People were talking about like how can you be on the move and consume content, high quality content and all of that, right? And a lot of podcasters mushroomed all over the place, right? And then Spotify, multiple other platforms came in, which were hosting podcast and all. So we also participated in the revolution or kind of whatever like fashion of kind of participating in podcast. But what I have seen is that like we have done small things like some of our blogs, articles on our website. We have put in Amazon Poly. So in a way, like those articles now can be listened into rather than being read. Even that has given us a lot of uptick on our traffic and listenership of of those like articles and blogs. So fundamentally podcasts are good, but as Ankit shared, like video generation doesn't take too much time, and today the bandwidths have improved. today actually even the podcaster and even the well-known one will actually do two version. One will be the podcast and one with the YouTube version. That tells you that, doesn't matter. Like, like it can be podcast or YouTube video as such. Even YouTube has kind of come out with their, separate audio only platform, so which tells you that, the, the novelty factor from the podcast has gone. Finally, it's the content, whether in audio or video format, which can, create the impact as per your category or, your company's or brand's requirement.
Right, right. So now let's changing track a bit. As digitization process increases and more people, come into its ambit. So we would like you to highlight the cybersecurity threats, the realities of the market, and how fintech and BFSI companies need to address that. So Tushar, starting with you.
Sure. So, on the banking side, obviously we partner with various banks to bringing the digital native customers, onboarding them and getting them to start doing banking transactions. So yeah, I mean, we are always around the clock. There are systems, there are checks and measures in place which do take care of these cyber attacks, and because there are definitely as the technology improves, these people try and the fraudsters try and find out newer ways of trying to fraud or defraud the customer, especially in context of these people who are in tier 2, tier 3 cities. Their knowledge levels may not be that high in terms of how to safeguard their debit cards and how to safeguard their data and not get kind of sleazed by any of these fraudsters. And obviously all of us come to hear about multiple things, that someone sends me a QR code, some link, and tells me to kind of accept it, and the money moves out using UPI from the account and all. So while these things are there, we also, most of the banks do that, and we as a fintech as well do. We do create various FAQs and modules, and from time to time, communicate with our customers, our set of customers, that whatever we do at our side to overall protect their accounts, it is equally their responsibility as well to kind of be aware about what's happening, and not to share any of these account related informations with any of these people who may try to pretend to be called from a bank, mail from a bank or fintech partners, and lose money because of.
I think we have lost some connect. Okay, so while Tushar comes back online, Ankit, why don't you take us through the process that a company like yours take to safeguard the interests of your customer base, to protect them from cybersecurity, and also as to what more can be done to bring in that kind of security from the smaller markets.
Right. So I think so one, it is not it's a constant effort, because the moment you come across some new way that people are being defrauded, and you take action on that, then there's a next thing, and then the next thing, and the next thing. So it's about being vigilant and being aware. But there are two things where, at least for companies like us, it's twofold. One is at the operational level, and then the second is at the communication level, right? Where at least we've taken, and we continuously keep improving upon our security protocols in terms of managing and safeguarding consumer data. And then the second part becomes where the moment you find out something, or you encounter a new way where people are being lured into something, you try and communicate that with the customer as soon as possible and as many times as possible. Telling a customer that you can be defrauded this way, that you is not spamming. So letting them know is very, very important. Then again, in our case, so because we're a marketplace business, we don't really need to, or we don't come across too many issues in terms of banking fraud or credit card fraud, because eventually the customer does get handed over to the bank. But wherever we do have arrangements with our lenders, we do go that extra mile. And like I said, operationally, we are extremely vigilant in terms of how we are maintaining user data.
Right. So Prabhakar, education, creating awareness, they are, I guess, some of the biggest tools that companies have. Apart from that, what more can be done to provide that level of security, and also so that they are not fleeced, and they are able to protect themselves more, especially in the smaller towns? So what steps can companies like yours take to guarantee that? And every time such a breach happens, there is also a lack of trust somewhere happening. So how does the BFSI sector address that?
Yeah, very interesting question. I mean, this is an age-old issue. I mean, and we have seen extreme like SBI, which is one extreme. I mean, creates a high security password for everything,
Right.
including ATM transaction. Then we have the new age fintech. They rely a lot on algorithms, risk and fraud prevention, and all of that, right? And somewhere our business is no different. See, particularly because earlier what used to happen that in our business also, there used to be someone called dealer who would kind of do the trade on customers' behalf, or there will be advisors, who will advise, people what to buy and sell. Now those kind of interfaces are no longer there. So we are basically nothing but a platform which is available, on which people can come and transact. There are layers of advisory, but most of it is led digitally. It's a very digital led, insight led, digital led kind of layers which are there. So the human interventions are the lowest. So over time, what happens because of that, customers become more DIY focused. And hence, I mean, at least from our side, we don't have any incentive in kind of getting more trade from the customer. I mean, that's not our incentive, because if you look at purely from the delivery, cash delivery, what we say that you buy some stock for long term, we don't charge any brokerage there, right? And the other bit, which is like intraday, future and options, currency, commodity segments, which are more complicated segments, there also we charge a flat fee. And there the customers are more sophisticated, and we are also providing nudge and tools, so that people don't fall prey to false pump and dump schemes, or like I mean, somebody sending something in their Telegram channel as like advisory and all of that. So none of it will kind of happen from our side on our platform. Some people can masquerade us, but we kind of scan the digital environment proactively, and digital environment proactively, and we kind of take out those elements. And if we get a customer complaint, we act against third party also, even if they are not part of our system, but we don't want anybody to masquerade some like part of our ecosystem. So these are some of the steps we take. I mean, can there be more? Of course, there can be more, but there is a fine line between being a headmaster or police versus allowing people to use the platform more responsibly. So our focus is to use get the platform to be used more responsibly. Also, we have SEBI, the exchanges, and all of us keep communicating about these educations in a very, very interesting way in Twitter, Instagram, YouTube kind of platform. So fundamentally, we believe that this kind of ecosystem initiatives would actually stop an average investor or trader to fall prey to kind of fake news, pump and dump schemes, or getting defrauded. This is how we look at it.
Right. So we have covered a lot of ground in this session over here. This is not the easiest of topics over here. It's quite complex, but thanks a lot for simplifying it. So as a parting shot, I would like each of you to highlight, I mean, despite the tremendous developments that have taken place in the BFSI sector, especially in small towns in Bharat, what more does this sector need to do, to bring about greater financial inclusion in Bharat, especially a resurgent Bharat? So, Tushar, why don't you start with this?
Yeah, I mean, there's a lot to be done, and both on the, all three of us represent the liability, the lending, and the investment side, the three different things a person can do. And each of these three have huge potential there. And what else we need to do is to make it more and more easy for them to operate, make it safer for them to operate, feel good about it, feel safe about it. And that's where I see, it will lead to a lot of growth. So make it much more simpler. All of us are working towards it, making it simpler for a guy sitting in a tier 3 town to open up a savings account, open up an investment account and invest, as well as apply for a small loan or a mid-sized loan digitally. So make it simple for them to kind of use. Make it safe. They understand that their risks are low. Most of the things the partners are taking care of. And at the same time, the cost of operating like investment or banking at a very, very minimal cost, or lending, getting the loans out at a lower rates. So I think these three things, all of us work towards it. It will lead to a much bigger market from what it is today.
Great. Safe, simple, minimal cost. Ankit, what are your views to make it more inclusive?
Sorry, I was on mute.
Yeah.
So I think there's already, the government, the private sector, everybody is doing, what they can to sort of push the envelope here. But I think from a lending perspective, it makes more sense to figure out how do we bring in more digital financial data into the fold, right? So with, we're already seeing something like account aggregators coming in, which can enable much smoother, seamless experiences for customers. But at the same time, so I would say it's a combination of a digital push where there is more digitization of data, of course, done securely, and at the same time communicating well with a user base which makes sense to them, right? So let's not, it won't really help us if we try and recycle content and educational material which was used for a metro audience, and then the same gets used for tier 3, tier 4 rural audience. They need to be treated the way they are, and that acceptance has to be there. And if both of these happen in tandem, I think the push would definitely come in. One last thing, I just wanted to actually compliment Tushar on their brilliant campaign. I love Salary Kitna Kamati Hai. It's wonderfully done.
Thanks.
Right. So Prabhakar, your views on bringing about more inclusivity over here.
Okay, great power comes great responsibility, and we at Angel One, being the largest brokerage house, being in the business for last 3 decades, I think we are a story of Resurgent India, to be honest. We have seen the Bombay Stock Exchange days to kind of NSE to today. We have seen it all, and we have kind of grown with the times. We have evolved with the times. Today, our positioning is, data and technology for everyday investor. That's what we want to bring. Last year, we rebranded from Angel Broking to Angel One. So One Angel for variety of fintech experiences. And today we are focusing more on democratization and access. These two were the biggest things of past. Access was denied, to the majority of Indians, and it was no one's fault. I think the business viability was, never there. Opening a branch in tier 3, tier 4 wouldn't actually give you, the kind of cost advantages if you're focused on one focused fintech. And if you are not, then you're making an elephant of kind of your business. Doing everything under the sun, and kind of you can't give the customer the best of the experience because of that, right? So today, thanks to this access phenomena, and I wouldn't say this has happened just because we as a fintech brokerage houses have done it. No, it's not. It's an ecosystem play. We are the beneficiary of the geofication broadband. We are the beneficiary of low-cost smartphone. We are the beneficiary of eKYC, Aadhaar, eSign, data locker phenomena, and we are beneficiary of multiple kind of demonetization. A lot of cash dealing is going down, so other asset class in real estate, gold are losing their charm. So a lot of these things have come together. So we focus that on top of all of these undercurrents of growth, we have to give access in low bandwidth, amazing UI UX, so Gen Z and millennials can participate in this great equity growth story in our country. And then the other bit is in terms of democratization. When I say democratization, that includes creating more and more knowledge content in vernacular, giving a push to the influencer ecosystem. I think if we do this job well in a continuous manner, I believe this will actually help the financial inclusion for tier 2, tier 3, tier 4 customers with certain monthly household income or certain demographic psychographic profiles.
Right. Thank you, gentlemen, Tushar, Ankit, and Prabhakar. Thank you for simplifying a very complex topic and giving us some great insights as to the inroads that the BFSI sector is making into the Resurgent Bharat, the smaller sectors. And this will surely pave the ground for future discussions as well. And we are looking forward to these discussions much beyond this forum over here. Thank you so much, gentlemen. Thank you so much.
Thank you. Thanks.
Thank you. Thank you, Shanta. Thanks, Tushar.
Thank you, panelists, for your insightful observations on the BFSI industry.